Okay, see here in the chapter of transfer pricing, we have finished this introduction and then we started with section 92A. What is section 92A? Associated enterprise. Okay, now see what is the meaning of associated we are studying, but before that, why it is necessary to study the definition of associated enterprise? Because only if when two entities, look at the screen, only when two entities are associated, the law will not trust the price declared by the assessee, and law will take the arm's length price as a base. So that not trusting a price, all that happens when the transaction is between two associated enterprise. Now what is associated enterprise? For this there is one keyword to remember, that whenever there is sub-lug gum-fo relation, whenever there is sub-lug gum-fo relation between two entities, it is treated as associated enterprise. In that first 2S we have finished. What was first S? That one enterprise holds at least 26% shares in another enterprise. And in second case, what did I say? If you remember, I told you like this, that in X Limited I am holding 26%, and in Y Limited also I am holding 26%. So X and Y both are controlled by me. So directly between X and Y there is no association. But since X is also controlled by me, Y is also controlled by me, so we can say X and Y has got common father. And whenever two entities have got common father, these entities are like brothers. So even if between X and Y directly there is no connection, but still they will be called as associated enterprise. So these 2 points we did. Then next point. Next is B. B stands for board of directors. B for board of directors. Don't look at the notes right now. First try to understand without seeing anything, just by explanation. So B stands for board of directors. Means if I am able to appoint more than half of the board of directors of another enterprise. I repeat, if I am able to appoint more than half of the board of directors of another enterprise, then also it is an association. Because see, in some if in a company who will be in the board of directors, if I am able to decide, means it is a big authority, because directors are the person who actually run the company. So a company will be run by directors, and who will be the directors I am deciding. Not necessarily all directors, even if more than half of the directors are appointed by me, that means I am able to control that company. And when I am able to control that company, that means I will be able to manipulate the price in case I transact with that company. Say for example, in my example only if you see, let's assume between X and Y there is no connection of 26% shareholding. But the position is that Y Limited's board of directors, more than half of the directors are appointed by X Limited. So when X Limited is able to appoint more than half of the directors of Y Limited, that means X Limited has got full control over Y Limited. And due to this control, what can happen? Law feels because of this control, they can manipulate the price. And when you are in a position to manipulate the price, law will not trust your price. But that position to manipulate comes when? Because you have got right to appoint more than half of the directors of another company. And there is one more option here. Either you are able to appoint more than half of the board of directors, or even if you are able to appoint one executive director. What did I say? One executive director of another company. Then also it's a big thing. Did you hear carefully? It is one executive director. When I say executive director, means they are the actual directors who run the company. See, many times in a company there can be say 20 directors, but hardly some 2-3 directors are there who actually run the operation, who actually manage the company. And the directors who actually work day in day out to run and manage the company, they are called executive director. So there are many companies in which you will find there are 15 directors, 20 directors, but these directors are just sleeping director. They are hardly involved in the operations and management of the company. But only say 2-3 directors are such who actually manage the company. And such directors are called executive director. So this means what, in a company, even if one executive director I am able to appoint, that means I have got a big power. And because of such power, I can control that company. And once I am able to control that company, that means I am in a position to manipulate the price. So that position can also come if you are able to appoint at least one executive director. See, at least one means it can be one or more. So see, there are two alternatives. Either I should be able to appoint more than half of all the directors. So if I consider all directors, then it should be more than half. And if I consider only executive director, the main directors who actually manage the show, then at least one executive director I should be able to appoint. In any such case, I will be called as associated with that another company. Now, here also that indirect connection is involved. Means, in the sense, in shareholding, there were 2 points. First was direct shareholding between two companies, and second was indirect. So similarly, here in board of directors also it is same. Means imagine X Limited's more than half of the board of directors are appointed by me, or at least one executive director is appointed by me of X Limited. Similarly, Y Limited's, imagine X and Y. X is more than half of the board of directors are appointed by me, and also Y Limited's more than half of the board of directors, or at least one executive director is appointed by me. So that means I am able to control X and Y both. So when I can control X and Y both, that means both are under my control. So for X and Y, they have a common godfather. For X and Y, there is a common godfather, and when two entities have a common father, they are like brothers. So indirectly, X and Y also become associated. So if you relate this in our example, imagine between X and Y there is nothing, neither 26% nor that director relation. But X and Y, they have a common godfather, me, for example. Then they will be called as associated. So in short, there are two B's. There are two B's in our keyword. One B states what? That is direct connection. Means if I am able to appoint more than half of the board of directors of another enterprise, or at least one executive director of another enterprise, then there is association. Then second point says what? That more than half of the board of directors, or at least one executive directors of two enterprise are appointed by same person. Did you notice how did I say? It's very difficult to say when you write in exam. So try to understand the wordings also. So what was B2? B2. More than half of the, remember the scene only, X and Y. More than half of the board of directors, or at least one executive director of two enterprises are appointed by same person. That is me in my example, and that same person can be anyone, an individual, firm, company, any. See, in this whole topic, don't try to think that whether it's a company or an individual or firm, any entity. The law is open for the type of the entity. Anyways, the term used by the law is associated enterprise. An enterprise can be anyone. It's a general term. So what did I say? What was B1? Repeat B1. B1 is direct connection. Means one enterprise is able to appoint more than half of the board of directors, or at least one executive director of another enterprise. Then how to say B2? More than half of the board of directors, or at least one executive directors of two enterprises are appointed by same person. So this was B2. Then next alphabet is L. L stands for, if I have given loan to some enterprise and it is not just nominal loan. You know how much loan I have given? at least 51% of your total assets. Means how much ever assets you have, at least 51% of that is financed by me. So if I am financing so much to you, that means I am in a position to control you. And if I can control you, I can manipulate the price in case of transactions with you. See, logic is what, whenever the law feels that one entity has become in a controlling position, so that controlling position gives us a freedom to manipulate the price. This is what law feels. So this is also a kind of control. What is the kind of control I said right now? That one enterprise total assets, at least 51% of that is given as loan by me. L stands for loan. One enterprise has given loan. How much? Loan? At least 51%. Try to imagine the scene. I have given loan to someone. How much? At least 51% of that entity's total assets. So imagine the balance sheet of that entity. So on the asset side, if they have got 100 crores, so 100 crores is the total assets. So I should have given loan of 51 crores or more. And it is understood that if I give so much of loan to someone, I can control that entity. I can get anything done from that entity. So at least I can manipulate the price. See, in all the examples which I am stating, relate this with X and Y. I will not show the example again and again, but this should go in your mind. So if I relate that loan point in this example, you can imagine like this, that maybe X Limited has given loan to Y Limited, and the loan is such that at least 51% of the total assets of Y is given as loan by X. And it can be vice versa also. See, never think that, sir, who should have given loan to whom? Whether X to Y or Y to X, doesn't make any difference. See, whether X has given loan to Y or Y has given loan to X, doesn't make any difference. Anyways, association is between two persons. So to create association between two entities, either one entity has done that thing or second entity, doesn't make any difference. So this was L for loan. See, till now whatever I explained, I'll just reveal the points. Look, what was in S? At least 26% shareholding. Look at the screen. What is in B? Either more than half of the board of directors or at least one executive director. And in L, what did I say? Everywhere you have to remember some percentage or proportion. Tell me, what was it? Greater than equal to 51% of total assets of someone is given as loan by me. Next alphabet is G. G for guarantee. Pay attention, look at, understand with the scene. Guarantee means you have taken borrowings and at least 10% of your borrowings is guaranteed by me. Means I am giving guarantee for your borrowings. Means you keep borrowing day in, day out. But at least 10% of your borrowings is guaranteed by me. So you know why this is an association? Because these days no one give guarantee for anyone. If I am giving guarantee for your borrowings, it is not a small thing. Because giving guarantee means what? In case you default in the payment, I will have to pay from my pocket because I have guaranteed. So giving guarantee is not a small thing. And especially out of your total borrowings, at least 10% borrowings are guaranteed by me. It is a big thing. So that means I have done a big obligation on you. And because of that, I can control you. And if I can control you, that means I can manipulate the price. And when price manipulation is possible, the law will not touch the price. See, in all the examples, think about it X and Y. So when I say one party, other party, it's like X and Y of our example, this example. Now see, one doubt you should get, that in loan there was 51%, but in guarantee it is just 10%. Did you notice? Some students get a doubt in this only. Sir, why in case of loan it was 51%, then it is an association. But in case of guarantees, even if it is 10%, it becomes an association. Why? I don't know whether you thought or not, but usually a student thinks, because a normal student usually feels loan guarantee one and the same, and they feel that in loan it is 51%, but in guarantee even if 10% it becomes association. But see, there is a difference. Giving loan, first I am explaining loan. Giving loan is not a big deal. If I have given loan to you, it's not a big deal, because whenever I give loan, I am secured also. I will have some security, or some security I will have. Usually when one person gives loan to someone, he gets himself secured by some security. So that means in loan there is a safety. In loan there is a safety. So giving loan is not a big deal. But if it is 51% or more, then it's a big deal. Then only we hype it. Yes, 51% means not a joke. That means you have done a big thing. Then only you are in a controlling position. But in case of guarantee, no one gives anyone's guarantee. Because giving guarantee means totally I am unsecured. Tell me, is there any safety in guarantee? Giving guarantee means what? In case you default, I will have to pay from my pocket. So I don't have any security. So when I am totally unsafe, that is a very risky situation. So see, whenever you are given guarantee for anyone, you are completely unsafe. And in such case, even if you give guarantee of at least 10% of someone's borrowing, it's treated as a big deal. See, the main difference is in loan there is a safety, but in guarantee there is no safety. That's why giving loan is not a big deal. It is treated as a big deal when 51% or more of loan has been given. But giving guarantee is always a big deal, because guarantors do not have any safety. So that's why in guarantee, even if it is just 10%, it becomes an association. Understand with feeling, because then only you can be confident in remembering. Otherwise, if you simply mechanically by heart, after some time you will make a mess. In loan you will write 10%, in guarantee you will write 51%. This is what usually happens. But if you understood the concept, you will not make such mess. So these many points we have done. Sub lug gum fo. S was shareholding. B was ability to appoint board of directors. L was given loans. G was given guarantee. But see, just remembering these words is not sufficient. You have to remember this percentage also, okay? And did you notice everywhere the percentage is greater than equal to sign? Everywhere it is greater than equal to sign, except here it is greater than half of the board of directors. This is the only place where you will find more than sign. Rest all places it is more than or equal to. Actually, law has not said more than or equal to. Law says at least. See, whenever we say at least 26%, at least means 26 or more. You should know how to interpret the words. So, law doesn't write like this greater than or equal to. They use the word at least. And at least means it is greater than or equal to. Then see, next point is little bit weird. Because when I say that point, from any angle you will not feel association. But after my detailed explanation you will understand, yes, there is an association of this kind also. So the next point I am talking about, next point. In next point, what is the next alphabet? G. But first you have to patiently listen to the sentence. At one go you will not understand. That what does it mean? How there is an association? But only when you understand with an example, you understand. Let me say that point. Goods manufactured. G for goods manufactured by one enterprise are sold to another enterprise, and the price etc. is influenced by another enterprise. Didn't I say by listening to the sentence you will not feel some control or association? With the example only you will actually feel this point. But let me repeat once again. What did I say? Goods manufactured by, imagine this is goods manufactured by one enterprise are sold to another enterprise. Now comes the main point. And the price etc. of that product is influenced by another enterprise. See, you got some in that the main point is the price etc. of the product is influenced by another enterprise. But still you will not understand deeply. To understand this, I will have to give you one example. Best example, imagine Nike. Nike, a brand for shoes, okay? Nike, Reebok. So now imagine, you know this Nike and all other big brands, what they do? They themselves do not manufacture. They have a separate entity who has to manufacture. Means they get the product manufactured from some another entity. So for example, imagine there is one company called Nike and I am Y Limited, just the name Y Limited, and I am a company formed by Nike only. Now what is my job, you know? Just to manufacture shoes as per Nike's instruction. Don't forget who am I. I am Y Limited and there one big brand is a Nike. Now why I am formed by Nike only. Now what is my job? Just to manufacture the shoes. Just to manufacture shoes as per the instructions of Nike. And then whatever production I do, I will have to simply sell it to Nike at the price determined by Nike. So basically instead of Nike itself manufacturing, it has outsourced to me. And me, I am totally controlled by Nike. My job is what? Simply to manufacture the shoes. And then manufacturing also happens as per the instruction of Nike. And when the manufacturing is done, I will sell the shoes to Nike as per the price decided by Nike. That means I am just a company for the sake of it. My entire formation and my operations are controlled by Nike. So even this is an association. And you know why this point is important? In this case, it might happen that between Nike and Y Limited, there might be no 26% shareholding also. And there is nothing like board of director connection also. But still, if this is established that Y Limited is manufacturing Nike shoes as per the instructions of Nike and then it sells to Nike at the price determined by Nike, so that means there is some connection. Otherwise, Y is totally dancing as per the tunes of Nike. So although there is no 26% relation, there is not even a relation of board of directors, but still law feels there is an association between Nike and Y Limited. So in case, if I just put that example here, imagine this is Nike and this is Y Limited. So it is an association. See what law tries to say, sometimes even if there is no 26% connection, there is no board of directors connection. But if we come to know what that one entity, say Y Limited in my example, is manufacturing the goods and selling to Nike as per the price etc. decided by Nike, that means you are totally influenced. You are totally under the influence of Nike. So then also it's an association. But see, here a doubt would usually come that how government will come to know. See, when I take the example of a big brand like Nike, you just accept it. Yes, there is an association. Because see, Nike is a big brand, and you might have heard also that Nike and all the big brands, what they do, they get their product manufactured by some another company. That's kind of job work. They get their products manufactured by some another company. So this you heard also. And Nike is a big brand, it's so popular, so you accepted it. But tell me, in real life, don't you think it's difficult? See, it is Nike. Now tell me, if I would have said like this, I am Y Limited and that some company is there, Z Limited. I manufacture goods and sell to Z Limited, and Z decides what to do. Had I given an example of Y and Z, you would not have easily accepted the point. So that can happen in real life also. Every brand is not big as Nike, Reebok. So tell me how income tax department will come to know if it is just a routine company, X Limited, Y Limited, B Limited, Z Limited. So how this can be discovered that I am manufacturing the goods, and then when I sell the goods, everything is influenced by that entity. Means at what price I should sell, at what terms I should sell, it is influenced by that entity, which in my example was Nike. So how government will come to know? This is the doubt a student has. Bring the doubt out, then only I'll explain. Understood, a doubt can come that how income tax department will come to know. So I understand it is not that simple that IT department will easily come to know. It is only when there is income tax scrutiny. It is only when there is an income tax scrutiny, when AO drills you. He has his own questions, and when AO starts questioning, he might sometimes discover, oh my God, Y Limited, you are just formed for the sake of manufacturing. Means you don't have your own identity. You simply manufacture the goods and sell to that company, and that company influences at what price to sell and how to sell, etc., etc. Means you are totally under the influence of that company. That means there is an association. Means these things are actually discovered when there is a scrutiny and detailed inquiry. See why I am saying this, because other points like 26% shareholding, board of directors, that can be easily known. Through some documents only we can make out, oh, in your company he is 26% shareholder. So these things are easily noted and known by the department. But the point which I discussed right now, it is not that simple that apparently it can be known. It is only when income tax scrutiny takes place, AO, when he drills you, he will realize, oh, that this kind of setup is there. And see, the example which I gave Nike, it is not just imaginary. It is very common in real life. Not just Nike, there are many big clothing brands like Zara. You might have heard one brand, Zara clothing. Now you know what Zara does? Zara gets all the clothes, shirts, trousers, denims, etc. manufactured from a company in Vietnam. Zara, a branded clothing store, what it does? It sells the product in the name of Zara brand, Zara. But what it does? All its garments, it gets it manufactured from a company in Vietnam. And in Vietnam, they have a separate company, not just Vietnam. They also have a company in Bangladesh. So every big brand does that only. So what Zara might be doing? It has instructed that company in Vietnam or Bangladesh to do what? Simply manufacture, don't apply your brains. It is a company formed by Zara only. So that company has to simply manufacture the garments. And once the manufacturing done, they have to simply sell to Zara at the price decided by Zara. So that was the point. See, now keep that Zara and Nike in mind, you will understand the sentence. See, I repeat the whole sentence written in the law. G. Goods manufactured by one enterprise. Say Z Limited, X Limited, whatever. Listen to me. Goods manufactured by one enterprise are sold to another enterprise. Here that another means that big brand, Nike, Zara, etc. So I repeat, goods manufactured by one enterprise are sold to another enterprise, Nike, Zara, etc. And the price, etc. of such sale, price, etc. means price and other terms of the sale are influenced by another enterprise. Means that Nike or Zara influences that at what price it has to be sold, etc. So this is also one kind of association. Anyways, if in exam this point comes, they will use the word influenced. See, in reality, I said only when income tax department does detailed scrutiny, these points will open up. But forget reality. As a student, you are interested in exam. In exam, how will you identify this? By the words influenced. They will write this thing that some company is manufacturing goods and selling to another enterprise, and that another enterprise is influencing. This word will come in paper. That another enterprise is influencing the price and the terms and condition. So once you see the word influenced, you should identify this is the same point of Nike, Zara which sir was explaining. Means in exam how to identify, I am saying. But in real life it's not simple to know these things. It is only when income tax scrutiny takes place they come to know that such is the arrangement. And you know what's important here is, in this example of that Nike and some another company manufacturing shoes, they are not having that 26% connection. That's what law is saying, na? That we are not dependent upon 26% only. Because these are so many criterias. If you fall in any one criteria, there are so many criterias. Even if you fall in one criteria, there is an association. Tell me what to do if there is an association. Why are we studying all this? Means once it is established that there is an association between X and Y and it is an international transaction. Look at this, AE plus IT. Then the price will not be trusted and the law will have to find a genuine price. See, we are going to the depth of the associated enterprise, but don't forget the main example with which the chapter started. Idea is what, under what circumstance we will not trust the price. I can put up like this also. So tell me under what circumstance we should not trust the price. Under a circumstance when they are associated. And when they are said to be associated, in any one of these circumstances from sublug gum 4. X and Y will be called as associated in any one of the circumstances from sublug gum 4. So this was G. See how I have written here. Did you see the main word influence? Repeat once for the last time. Look at this. Goods manufactured. You should remember with action. Goods manufactured means I am Y Limited and other company is Nike. Okay. Goods manufactured by one enterprise are sold to another enterprise means Nike, and the price etc. are influenced by another enterprise. Best thing is in your notes also, you write that example of Nike, Zara, so that you understand later also, because every time you will not be able to see the video again. See in the notes. Here you can write. Can you see the alphabet G? Goods manufactured by one enterprise are sold to other enterprise and the price / other conditions. So what you will write here? One enterprise you will write say Y Limited. That one enterprise can be Y Limited. And then other enterprise. There you can write Nike, Zara, or any big brand which you like. Okay, then see next alphabet. Look at this. M. Manufacturing by one enterprise is wholly dependent on the patent, copyright, etc. owned by another enterprise. Repeat, manufacturing by one enterprise. See, I manufacturing by one enterprise is wholly dependent on the patent, copyright, or license, whatever you say, of another enterprise. For example, I am just a company Z Limited, okay? You know, I am manufacturing Apple iPhone. But Apple iPhone, is it my brand? I am Shirish Vyas. I don't own the brand Apple. But imagine Shirish Vyas is a company, SV Limited. I am manufacturing Apple iPhone. But that manufacturing rights are given to me by actual company Apple Incorporation. And it happens many times. Means Apple, although he is the whole and soul patent and copyright holder of the product which it manufactures, iPhone, but it might happen that they have given the rights to manufacture me. So I have given the rights, I will manufacture Apple iPhone, etc. But my manufacturing is totally dependent on the patent of Apple. In case the Apple takes away the patent from me, I cannot manufacture iPhone because it is not my invention. But still, Shirish Vyas is allowed to manufacture Apple phones because I have got a license or a patent from the company Apple. So if that also is discovered in real life, it is an association. It happens sometimes. See, the example of Apple sounds very funny, but many times it happens that I am manufacturing some product for which the patent and copyright is owned by some another enterprise. Obviously, iPhone's patent, that invention license is held by Apple. But if I am allowed to manufacture iPhones, so that means I will definitely be under the control of Apple. Because the fact that I am allowed to manufacture iPhone, this itself is a big privilege. It's a dream for me. And for that, obviously, I have purchased the patent from, copyright from Apple. But then me allowed to manufacture iPhone, it's a big thing for me. So I am in such a position that Apple can control me. And what law feels, whenever one company can control you, that means there can be price manipulation between you. So this is manufacturing by Shirish Vyas, iPhone, is wholly dependent on Apple. Means if you remember with the example, it becomes simple. So manufacturing by Shirish Vyas means one enterprise is wholly dependent on the patent, copyright, technical know-how which is owned by another enterprise, that is Apple in my example. So these are also possible cases in real life. And see, in these cases, even if there is no 26% connection, means even if Shirish Vyas has got no 26% holding, nor Apple has got 26% in Shirish Vyas's company, but still it is an association because I have been given manufacturing rights. So it is not a small thing. It's a dream come true if I actually get the manufacturing rights of iPhone. So obviously I will always be obliged and controlled by Apple. And whenever you get controlled by someone, there are chances of price manipulation. See, every time you relate this X and Y only. Means if this same point, if I put it in XY example, so imagine this is Shirish Vyas, manufacturing. Okay, Shirish Vyas cannot be in foreign. Okay, let me come here. Shirish Vyas is in India manufacturing iPhone, and iPhone is the product of Apple. This is Apple. So you can relate that same example in this drawing also. So in short, all the circumstances which I am discussing, under all circumstances, one common thing is what? It is an association. And once there is an association, this price will not be trusted. And the law will rely on the genuine price, which is called the arm's length price. So look at this. M stands for manufacturing is wholly dependent. See, for a product like iPhone, I am wholly dependent on Apple. It is not that I depend to some extent on Apple. iPhone is such a product for which the manufacturer which is totally dependent upon Apple. If Apple gives me permission, if Apple allows me, then I can do. So I am wholly dependent on the patent, copyright or the technology owned by some another company. So then there is an association. So this was G and M. Did you notice in this G and M there was no percentage to be remembered, but there is a word to be remembered. Here what was the word? You are influenced by someone. Means you manufacture, and when you sell, price etc. is influenced by Nike. And here your manufacturing is totally dependent on some other companies, rights, technology, patent. So that is also association. Come on. Next alphabet is F. F for partnership firm. F for firm. See, in case of a partnership firm, even if you have got 10% stake, it is an association. See, in companies you should have 26%, but that is in companies. But in case of partnership firm, even if there is 10% stake, it is an association. Now don't think how come partnership firm I am talking about. I told you in the last lecture, the word associated enterprise is a broad term. It doesn't cover only a company. It can be a partnership firm also. So tell me, if there are two entities in which there is one partnership firm involved. So in that partnership firm, even if someone has got at least 10% stake, it is an association. But you know, you should have one doubt. You know what doubt? That why in partnership firm 10% but in company 26%? Means in company, if you have 26%, then only it's an association. But in partnership firm, even if it's just 10%, even if it is just 10%, it becomes an association. Because see, in partnership firm, there are only few partners. Hardly say 5-6 partners. So, me being a partner amongst 5-6 people itself is a big thing. Best example, imagine Mukesh Ambani, Neeta Ambani and Shirish Vyas. They are partner in a firm. I know it's weird, but listen to my example, what I'm trying to say. There is a partnership firm, a separate firm, a coaching class only, where Mukesh Ambani, Neeta Ambani and Shirish Vyas, 3 are partners, okay. My stake is only 11%. Mukesh Ambani, Neeta Ambani are the major stakeholder. In that partnership firm, it's a partnership firm. And my stake is only 11%. Still, it's a big deal. Me being a partner among this 3-1. See, me being one of the partners among 3 partners. See, what I'm trying to say, in a firm, there are only few owners. 3, 4, 5, 6, 10 partners. What more than that you will have? 15 partners. Let us take it 15 partners. So, in that 5 to 10 partners, me being one of the partner itself is a big thing. So having 10% is sufficient to create an association. But in a company, there are lakhs of shareholder. In a company, there are lakhs of shareholder. So me, one of the shareholder, is not a big deal. Not understanding only. In 5-6 partner, me being a partner itself is a big thing. But in lakhs of shareholder, In a corporate structure, me being a shareholder is not a big deal. It will be a big deal only when I have got 26% stake. Because in corporate structure, we feel there are so many shareholders. So if Shirish Vyas is a shareholder, so what? Yes, if Shirish Vyas has got 26% or more, then it is an association. Then there is a close connection between that company and Shirish Vyas. But in partnership, hardly 4-6 partners are there. So I being one of the partner itself is a big thing. And in that, even if I have 10%, it's an association. I'm justifying why 10 year and why 26 year. Because the structure is different. It's a company where there are so many shareholders, and this is a firm, there are only few partners. So this was the second last point, that one enterprise has got at least 10% stake in another enterprise who is a partnership firm or AOP or BOI. You know what does the law actually mention? They just don't say firm. They say whether it's a firm or association of person or body of individuals, whatever, but not a company structure. Means it can be a firm, association of person or BOI, blah blah blah, etc. Means what they try to say, other than company, is some general structure is there, then even if 10% stake, it's an association. Then last point, O. O stands for any other relationship of mutual interest as may be prescribed by the law. You know what law is trying to say? Apart from these many cases, there can be few more circumstances which we will decide and inform in the budget. As of now, there are only these many circumstances which can create an association, but by keeping a point like O, what law tries to say, the definition doesn't end here. This definition can be expanded, but in budget. So whenever law feels that even this can be an association, even this can be an association, so they will put that new point in the list by way of amendment in the budget. So in short, law has kept an open point, any other relationship as may be prescribed. As may be prescribed means prescribed in the budget by the finance minister. So this is the definition of associated enterprise. But see, let me tell you, there are few more points actually in the act which I have not taken in the keyword because they are not so important. I have not taken in the keyword. But most important points I have covered. Because see, if you actually see the bare act, you will find some few more points which is not there in our notes. But they are not so relevant. See, the idea of studying this is what? Are they going to ask a theory question on this? What is associated enterprise? Discuss in detail. They will not ask a theory question. You know why are we studying this definition? Because in exam they have a question. They ask a sum to be solved. And when a sum is created, there they will give something like some enterprises having 26%, or someone has given loan, or someone has given guarantee. They will create such situation in the sums. Target of this chapter is you should be able to solve the sums. But when the sums are created, in the sum they put such situation. So looking at the situation, you should come to know, yes, there is an association. So that much is the limited objective. Otherwise, they are not going to ask a detailed, straightforward theory, definition kind of question on associated enterprise. So from sums point of view, if you have to remember this, so these many points are sufficient. These many means almost all the points are covered except few points which may be there in the law, which are not so important. That's why not covered in the act. So this was associated enterprise. So tell me once again, one by one. Everywhere you have to remember this thing. So tell me this properly. So what was the first point? First point is what? One enterprise Understand with action, it will be better way to remember. See, one enterprise holds at least 26% shares in another enterprise. Okay, then at least 26% shares of two enterprises are held by same person. Then B1, B2. One enterprise appoints more than half of the board of directors or at least one executive director of another enterprise. Then more than half of the board of directors or at least one executive directors of two enterprises are appointed by same person. Then L, one enterprise advances loan of at least 51% of the total assets of another enterprise. Then one enterprise guarantees at least 10% of the total borrowings of another enterprise. Then GM, one enterprise manufactures goods and sells to another enterprise and the price etc. is influenced by another enterprise. Here another means Nike, Zara etc. Okay. Then manufacturing by one enterprise is wholly dependent. Shirish Vyas manufacturing iPhone, but my iPhone manufacturing is totally dependent upon Apple's patent, Apple's technology. So manufacturing by one enterprise is wholly dependent on patent, copyright, technical know-how owned by another enterprise. Then F, one enterprise has at least 10% interest. See, the law has used the word interest. Interest means we are interested in money only. So profits. So at least 10% profits. Instead of that, we say at least 10% interest. So one enterprise has at least 10% interest in another enterprise who is a firm, AOP, BOI, etc. etc. But at least 10% stake. Then O stands for any other relationship of mutual interest as may be prescribed. Now tell me, this sublug GUM4, is it necessary that you have to fulfill all the criteria or anyone? It's anyone. One more important point. Look, this circumstance can exist at any moment of the year. Even if just for one day, throughout the year, there is 26% shareholding. It's an association. See, this 26% shareholding, do you agree? It can fluctuate. That sometimes I am having 20% shareholding and sometimes my stake increases to 30%. Then again it comes to 5%. Except one fact that this 26% can keep fluctuating. Every person can fluctuate. Every percentage can fluctuate. So what is important is you have to see that percentage as on which date? At any point of time during the previous year. During the previous year means the year when X Limited has sold the goods to Y Limited. In that year, even if just for one day between X and Y there was 26% connection, it's an association. You know, if law wouldn't have said like this, what these people will manipulate, what they will say, see dear, when we sold goods to Y Limited, we didn't have any connection. At the time when we sold to Y Limited, we didn't have any connection. It was after the sale, we had that 26% relation. See, law is not going to listen to any rubbish excuse. See, whether that 26% relation was there earlier or it came later, at any point of time during the year of 365 days. For May 24 attempt, it is 366 days. In May 24, what is our previous year? 23-24. There is a leap year. Did you notice that? For May 24 exam, what is the previous year? May and even November 24. The previous year is 23-24 and there is Feb 24 which is of 29 days. So just casually reminding you, so in the previous year of 366 days, our previous year in exam is 23, 24. So in this 366 days lot, even if for one day, forget one day, even if for 1 hour, for 1 minute also, there is 26% shareholding, or for that matter any of this thing exists, even for one day, it is an association. See, if law wouldn't have been like this, people would have manipulated. Imagine if law would have said, we will see the status as on 31st March, or we will see the status as on 1st April. So if law would have fixed a date, that 26% blah 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 will be measured as on 31st March, on 1st April, people can manipulate easily. So since the law wants that you should not be able to manipulate, the law is so strict that at any moment during the whole year, if any one of these circumstances exist, there is an association. Yes, we cannot see the status of past and future year, we have to see that year only. See, in that year law says any day, any moment, but that year. This means what? That X Limited has sold the goods to Y Limited. There was 26% shareholding in past years. So that past year's shareholding has got no connection. Then law cannot say, no, you are associated. Why? Why are we associated? Just because we had 26% connection in past year, you cannot say association. Now there is break off. The relation does not exist anymore. See, if that relation was there during the year when sale took place, so even if there is a break off, the relationship is treated as existing. But if there was a relation of 26%, see, I am just saying 26% for the sake of convenience. Actually, whether it is 26% or whatever, if something like this from Sublag Gumfo existed in past year, are you listening? Past year, then you cannot be said as association. Means these things should happen in current year. Current means the year when sale took place. In that year we have to see no past, no future, the present. Yes, within this present year, even if just for one day or one moment, Sublag Gumfo, anything from that exists, it is an association. In short, see, the section, provisions of section 92A, you know how it starts? Pay attention here. Two enterprises shall be treated as associated in any one of the following circumstances at any time during the previous year. Did you listen? Two things properly. In any one of the following circumstances at any time during the previous year. I repeat, the definition starts like this only, that two enterprises shall be treated as associated in any one. Any one means anything from Sublag Gumfo. In any one of the following circumstances at any time during the year. You know what does it mean at any time? Even if it is just for one day or a one moment or 1 hour. If this thing had existed, then it is an association. So this was finally 92A is done. Associated enterprise. Okay. Then let us go back to the summary. Okay, now proceeding with this chapter, next what we have? We did introduction, we did section 92A. Now next is 92B. This is definition of international transaction. See, as I have already stated in the last lecture, that after understanding this example, we have to go into the depth of this equation. In the sense, what is associated enterprise, what is international transaction, and then what is arm's length price and all that. The whole chapter is revolving around this equation only. AE plus IT is equal to arm's length price. So what is associated enterprise we have studied. And you know what is the importance of this definition? That once between X and Y, look at my example. Once between X and Y it is proved that there is a sub lug cum for type relation. That means law will not trust the price. But see, just having association is not sufficient. There is one more condition to be fulfilled, that there has to be an international transaction. Now what is an international transaction? This is what we have to study next. Can you tell me what is an international transaction? I will explain 92B afterwards. But first you need to tell me, as per your understanding, what do you think is an international transaction? So see, what a layman would think, international means goods should be sold from India to foreign country. See, you just don't have to see the transaction from one country to another country. That cross-border transaction and international transaction is different. See, normally how do you think when the goods are crossing the border of the country, they are going to some another country, it becomes an international level of transaction. See, this is layman's understanding. But what is the understanding of lawman, As per law, international transaction, listen carefully, the definition you will find little bit weird, then I'll justify. International transaction is a transaction where at least one party is a non-resident. You didn't even imagine that something of this will be there. Because normally a layman would think what? International means goods are sold from India to foreign. It's not like that. Or sometimes you think vice versa, that goods are purchased from foreign to India. So that crossing of goods from one border, from country to another country is not sufficient. Your residential status is important. That at least one entity, means between X and Y, at least one should be a non-resident. And when I say at least one should be non-resident, means either one or both. I said at least one. At least means greater than or equal to. So either X or Y, anyone should be non-resident or both should be non-resident. So can you guess what is the logic of this kind of definition? See, you will be able to understand the logic if you appreciate one thing, that why law is behind international transaction. Why this chapter is meant for international transaction only? You forgot the whole purpose of the chapter. This chapter is to slap the cheating of base erosion profit shifting. This chapter is mainly made for what? To slap the cheating of base erosion profit shifting. And when profit shifting will take place? Profit will shift when there is an international level of transaction. So thinking that lines, then only you will understand the logic of why at least one party should be non-resident. See, the idea of this chapter is what? Whenever the law feels there is profit shifting from India to foreign, they will invoke the provisions of transfer pricing. See, I'll do one thing. I'll show you this 3 possibilities. One by one you try to imagine. You will automatically understand the purpose of the definition. Firstly, let me repeat the definition. International transaction is a transaction in which at least one party should be non-resident. So this means, look at this. If both the parties are resident, then it is not an international transaction. Can you see I have put a cross mark here? Means it is not an international transaction if both are. Both means what? Both means what? In my example, both means what? X and Y. Please, for the whole chapter, take this example as a base. I can teach the whole chapter till the last section with the help of this example only. So it is good, na? That with one example only you understand everything. It is good for you. So keep this example in mind and tell me, that if both are resident, then it is not an international transaction. Why? Then, let me finish. If one is resident, one means either X or Y, and other should be non-resident, either X or Y, then it is an international transaction. And if both are non-resident, both means X and Y, then also it's an international transaction. So can you tell me what is there in the mind of the law while making such definition? Means they are simply focusing on the residential status. But see, before you try on your own, you need to first understand how companies are decided to be R or NR. How a company is decided as a resident, non-resident. This little bit idea you should have, otherwise it's difficult for you to imagine and understand this point. So I'll just give you one brief idea. Look at the screen. One brief idea as to how companies are decided whether they are resident or non-resident. You know why I'm bothered of a company? Because for individuals, you have studied very well in CA Inter that an individual will be resident if he stays in India for 182 days or more. Remember that staying in India for 182 days or more, you become a resident. But that is for individual. But usually the topic of transfer pricing, you will find corporate type of assessee. Usually, although the topic is not just for companies, it is for partnership firm also. But usually in real life, the assessees who are governed by transfer pricing law, they are usually companies. So it is better that you understand that how a company is decided to be R or NR. Because only if you understand that, I can convince this thing. So my idea is to convince this thing only, but first I need to give you some general explanation about residential status of a company. So see, it's very simple. For a company, most important is incorporation. Means where the company is incorporated. You know, to form a company, you have to get it incorporated by making some memorandum, articles of association. There is some certificate of incorporation. You have to approach ROC, registrar of companies, etc. So see, incorporation is the deciding factor. If a company is incorporated in India, then first we call it an Indian company. So tell me, if Prime Vision is incorporated in India, so I will be an Indian company. And once Indian company, you are always a resident. Always. It can never become a non-resident. Who? An Indian company. And how do you decide you are an Indian company? Incorporation. So what's most important is incorporation. If incorporation in India, Indian company. And if Indian company, always resident. Okay, the other way around. If your incorporation is in a foreign country, for example, Prime Vision, I incorporate this company in Singapore, in a country called Singapore, Dubai, London. So if you are incorporated in foreign, then you become a foreign company. And foreign companies are usually NR. Did you notice what I have written? Usually. Means not always. They can be resident also. A foreign company can be resident also, but 1% chance. 99%, or I can say usually it is non-resident. So what doubt you should have, or what curiosity you should have right now? Sir, you said usually non-resident, but that means it is possible that a foreign company can be R, right? So when? So it's not possible to explain now. It is a detailed theory. I will explain at a proper time. Right now, this much knowledge is sufficient for the purpose which I am trying to achieve. Right now, my purpose is what? To make you understand 92B. So for that, the limited knowledge which you require, I have given. What I am not explaining in detail right now, you know, What I am not explaining in detail? That when a foreign company can become a resident, because my chart says usually they are non-resident, usually, but they can become resident, right? But when they can become resident, this if I start discussing now, I will go off track. We will get distracted from the main theory which is going on. But this much knowledge is sufficient as of now. Okay. So tell me this without looking. Look at me. Company, you have to first see the incorporation. If incorporated in India, then you should call it an Indian company. And once Indian company, it is always a resident. It can never be NR. But if a company is incorporated in foreign, then foreign companies are usually non-resident. They may be resident rarely, but when they can be resident to be discussed later, but usually they are non-resident. As of now, you just remember foreign company means NR. Okay, now try this. Try one by one. Why this is not international transaction and why these two cases are of international transaction. You can try best with the help of this example only. Okay. Did you see I created three situations? RR, RNR, NRNR. These three situations, right? So one by one check. Tell me if X limited is R. And Y limited is R. It is not an international transaction. Why? Wait. Firstly, many students will doubt. Sir, how come in your example Y limited can be R? Because Y limited you have drawn in foreign country. See, Y limited, although in foreign country, but if it is incorporated in India, if Y limited was incorporated in India, right now what did I say? Incorporated in India means Indian company always resident. So it is quite possible that X limited is incorporated in India, it's a resident company. Even Y, although it's having business in Dubai, London, blah blah blah, but even Y limited is resident because it is incorporated in India. Firstly, except it is possible in my example. Although I have shown Y limited in some foreign country, but maybe Y limited is running the business in foreign, but it is incorporated in India. And once a company is incorporated in India, it's an Indian company which is always resident. So it is possible that X is resident, even Y is resident. And when both are resident, it is not an international transaction. Why? Because there is no threat of BEPS. There is no threat of base erosion, profit shifting. See, understand the feeling of the law. Whenever the law feels the threat of profit shifting from India to foreign country, they will attack you in this chapter. But do you feel any threat of BEPS in a case when both are R? Why no? Tell me why no? Because see, if X and Y both are resident, so even if they manipulate the sale price, means instead of selling the goods at 6,000, they are selling at 4,000. Even if the price is manipulated, government is not affected. Why, tell me? Because X limited tax will reduce on $2,000. But Y limited tax will increase. Why Y limited tax will increase? Because sale for X is purchase for Y, and if Y has to show low purchase, its profit will increase. But even Y is paying tax in India. Y being a resident, Y limited being a resident also pay tax in India. So when Y limited will have to pay tax in India, so profit is shifting or remaining in India. If Y limited has to pay tax in India, so profit is not shifting, it's remaining in India. Because see, do you remember in my example I said that in this manipulation of sale price, X's tax is reducing, but on the other Y's tax is increasing. But then X is also liable to pay tax in India being a resident. Even Y is liable. Do you agree Y has to pay tax in India? You know, a resident entity has to pay tax on world income to India. You remember this rule? Once you are a resident, you have to pay tax of world income to India. So if X, Y both are resident, they will ultimately pay tax in India. So government is not affected. What law says? Do whatever you want. If X's tax will reduce, Y's tax will increase, and anyways both are paying tax in India, so profit will not shift from India. So there is no threat of base erosion, profit shifting. You know, this term is very famous in international global market. Which term? Base erosion, profit shifting. So you should be familiar and you should be so comfortable in using this in a sentence. See how comfortably I said that whenever two parties are, both will have to pay tax in India. So the law does not feel the threat of base erosion, profit shifting, because profit shifting means shifting to the foreign country, foreign government is getting the tax. But here that is not the case, because both will pay tax in India. But now tell me, what if this is the case? Means X Limited is resident. Why? Because maybe X Limited is incorporated in India, but Y Limited is non-resident, because Y Limited is incorporated in foreign, and being a foreign company, usually it will be NR. So now tell me, is there any threat of BEPS? Is there any threat of BEPS? Yes, because see, X Limited will pay tax in India, and rather it is reducing the tax of India. But on the other hand, Y Limited has got no connection with India. Tell me why? Firstly, Y Limited is a non-resident and it is having its business place also in foreign country. Did you see where Y Limited is running the business? See, Y is selling the goods in foreign country only. Y's place of business also foreign. And you know, for a non-resident, if they have earnings in foreign country, they are not liable to pay tax in India. This Y Limited, tell me, why did I say that Y Limited will not have to pay tax in India? Because firstly, it's a non-resident. Secondly, its place of business, its source of revenue is in foreign country. So they are anyways not liable to pay tax in India. So when Y Limited will not pay tax in India, means where will it pay the tax? It will pay in foreign country. That means India's profit shifting there and foreign country enjoying the tax. Then there is a threat of base erosion, profit shifting. See, understand the funda means change your perception. See, a layman thinks international transaction like a general thing only, international level. Means from India to foreign. See, here law doesn't think about goods crossing from one country to another country. They are interested in the residential status. If they feel the profits will shift to foreign government, it's an international transaction. And there are chances of profit shifting when one is R, other is NR. Because the resident party will erode the tax of India. But on the other hand, the tax which shifts to other party, he is not paying tax in India. You know why did I say Y will not pay tax in India? Because if Y is NR and if it has place of business in foreign, so why will he pay tax in India? So all these taxes will go to foreign country. So India's tax is being shifted. You know, this point, even if I would not have explained, you have understood. I remember this, but then being a sir, I have to explain everything. Actually, a student needs explanation here only. This is a challenging point. Tell me, how come this can become an international transaction? Both the parties are NR. Or I will put like this, can two NRs create a threat for Indian government? Which threat? Profit shifting, and the tax which India should get is being shifted to foreign. Is it possible that two NRs can hurt the Indian government sentiment by creating a base erosion, profit shifting from India to foreign? See, whole chapter you have to think like this only. Whenever you feel there is base erosion, profit is shifting from India to foreign, this chapter is activated. So see, it is possible that two NRs can create BEPS. BEPS means base erosion, profit shifting. See, imagine X limited is non-resident, okay? Even Y limited is non-resident. First, tell me why both are non-resident. I said, how do you become NR in corporate world? I explained you that sometimes back. For a company, RNR depends upon incorporation. I told you. So imagine X and Y both are incorporated in Australia. Imagine both are incorporated in Australia. If companies are incorporated in foreign country, they become a foreign company, and foreign company usually NR. So both are NR, because I am assuming like this, that even X was incorporated in say Australia and Y was incorporated in Australia. So technically both are NR. But now guess what I will say next. X Limited, even if incorporated in Australia, it has a place of business in India. X Limited, imagine it is incorporated in Australia, due to which it has become NR. See, I have written NR, but it has a place of business in India. So when it is a place of business in India, the income accrues in India. And for non-resident, if income accrues in India, they have to pay tax in India. You know this or not? I repeat what I said. X Limited may be incorporated in Australia. Because of that, they are foreign company, they are NR. But forget Australia, they are having the place of business, means their factories, godowns, sales office, etc. Everything is in India. And once they have a place of business in India, the income is said to accrue or arise in India. And as you know, that whenever non-residents income arises India, they are liable to pay tax in India. So if X Limited is liable to pay tax in India, and if X Limited manipulates, so it is shifting India's profit to foreign. Means even though X Limited is NR, it is hurting Indian government. Let it be NR, but since it has a place of business in India, they have to do reporting in India. And while reporting in India, they are cheating India by manipulating the price. So I am just trying to prove Indian government, will it be affected or not? It will be affected. And assume in my example, Y Limited is Australian company having business fully in Australia. It has no connection in India. So that means what? One NR has to pay tax in India. And the other NR in my example, Y Limited, is not paying tax in India because it is incorporated also in foreign, having business place also in foreign. So they pay tax in foreign. But they pay tax in foreign on the profit which is shifted from India. So there is the threat of BEPS. In short, it is possible that two non-residents can also hurt Indian government, especially when one of the non-residents should be having a place of business in India. I mean, this is a condition, huh? What is the condition? that one of the non-resident, say in my example, X Limited, should have place of business in India. Because only if it has a place of business in India, it will be liable to pay tax in India. And if it is liable to pay tax in India, so it can affect Indian government sentiments. And there is a threat of base erosion, profit shifting from India to foreign. So in short, see, if you notice, I have written here already. Look at the screen. Something will come up now. Whatever written, come on. Whatever written, one NR should be a non-resident having, what is POB? Place of business in India. See, if you understand the feeling of this section, you will realize, in short, one party is liable to pay tax in India and other party has got no tax connection with India. You are not understanding the logic. The logic is what? Whenever the law feels base erosion, profit shifting, means profit of India is shifting to foreign. And mainly because of that, tax of Indian government is earned by foreign government. This law will not tolerate. And that is possible. Informally, you can say like this, that whenever one party is liable to pay tax in India and other party is not liable to pay tax in India, then only India's profit is shifted to foreign and foreign government is enjoying. But see, this is informal way to say, what? One party is liable to pay tax in India, other is liable to pay tax in foreign. This is informal way. The proper way to say is, either one party is R, other is NR, or both are NR, but one of which should have a place of business in India. Indirectly means what? That this NR having place of business in India will be liable to pay tax in India, but the other NR should have no connection with India. So if this situation is discovered by the law, in the eyes of law, it is an international transaction, because they see base erosion, profit shifting. Tell me, what if this was not there? Means both the companies are totally NR. No one is liable to pay tax in India. What I'm trying to say, if this thing was not there, means what? One company is incorporated in Australia, business also in Australia. Other company is incorporated in Singapore, business also in Singapore. So if two companies are incorporated abroad, carrying on business also abroad, so how Indian government is affected? We are unaffected. So such two NRs combination is not covered here. Such two NRs means where both the companies are incorporated abroad, both having place of business abroad. So if they transact between them, how Indian government is affected? So that combination is not covered. So it is a case where two are NR, but one of which should have a place of business in India, because if they are paying tax in India, and when they pay tax in India, if they manipulate, government will not tolerate. So this is definition. This is the definition of international transaction given in 92B. Now see the proper version of the section. Look at this. International transaction. Pay attention here. International transaction is a transaction of sale, purchase, lending, borrowing, etc., etc. Any transaction where at least one should be NR. That is either one party is NR or both are NR. But did you see the start of the sentence? It can be a transaction of sale, purchase, lending, borrowing. You know, this you should understand, because although I have taken the example of sale to launch the chapter, but don't think the chapter is only meant for sale. You only tell me, If the chapter is restricted to sale, won't it be so funny? What is the idea of this chapter? To attack base erosion, profit shifting. And for profit shifting, sale is not the only transaction. Any transaction, anything from profit and loss account, anything from profit and loss account which has an impact on profit can create BEPS. So for example, even if it is just a, say for example, rent transaction, rent payment, rent. So rent has an effect on net profit. If rent expenditure is less or more, it will affect the profit. So in short, I am just giving a wild example of rent. So whether it is the rent expenditure, interest expenditure, interest income, dividend income, sales, purchase, any transaction, if the transaction has an effect on profit, it will be international transaction. So tell me, if you have really understood, is it possible that there is an interest transaction between the two parties and there can be BEPS? Means assume X is paying interest to Y. Wait, let me write properly. There is interest transaction where X has paid interest to Y. Can there be BEPS? Don't forget X is paying interest. Huh? So X is paying. So what kind of cheating is possible? For X, interest in expenditure. And how do you manipulate the expenditure? You try to show more. You try to inflate. Because higher the expenditure, lower will become the profit. So you should understand, you should know how to do cheating. You should not do cheating, but you should know how to do cheating. Knowledge is important, because although you don't do cheating, but if someone cheats you, you should understand, you should have that smartness. Don't become cheater, but know how cheatings are done. So tell me how this cheating can be done. X Limited will pay interest at higher rate. Means the rate of interest in the market is say 10%, but it will pay 25%. Purposely it will pay higher interest to Y Limited, because if it can show more expenditure, it will reduce the profit. But if you pay more interest to Y, Y will have to show more income, because interest is expenditure for X, income for Y. So if that interest is given at a higher rate, so that will automatically become income of Y Limited, and Y Limited will pay more tax in foreign country. But ultimately it's shifted from India. Instead, I am just opening up your mind so that you don't restrict yourself to a sale transaction. You cannot be rigid in this chapter. The transaction can be of sale, purchase, income transaction, expenditure transaction, any transaction. Only thing is, if it is an income transaction, how do you manipulate? By showing it small, small, small. And if it is an expenditure transaction, you try to inflate it. But anyways, wherever there is a transaction of income or expenditure, it has an effect on profit. So there can be base erosion, profit shifting. So that's why what the law says, international transaction can be any damn transaction. It can be a sale, purchase, lending, borrowing. Lending, borrowing means it will give rise to interest payment or interest income. So international transaction can be sale, purchase, lending, borrowing, lease, etc. Any transaction wherein at least one should be NR. That means either one is NR or both are NR. And you know that one which NR which you need should be NR having no tax connection in India. At least one party should be NR means we want someone who has got no connection with India, but he is paying tax to foreign government. But he is paying tax to foreign government of the profit which actually belongs to Indian government. So at least one should be NR. At least one should be NR. So even if both are NR, but one of the NR has a place of business in India, it can become an international transaction. So this was 92B. So this was section 92B, international transaction. So see here, after studying 92A and 92B, listen to this sentence now. Whenever between the two entities there is a relation of sublug gumfo, and out of the two entities either one is NR or both are NR, the price will not be trusted by government. Repeat, what did I say? Whenever between two entities there is a relation of sublug gumfo, and out of the two entities either one is NR or both are NR, then in such case the price declared will not be trusted by government. So what government will do? They will find out the genuine price, which is called the arm's length price, and whatever shortfall is there in the price, means that difference of $2,000 shall be added to the income of X Limited. See, in this whole chapter we are targeting X Limited. Indian government has got no connection with Y Limited. Let Y Limited do whatever it wants. Government is regulating X Limited. That if X Limited has shown less profit, we will add to the income of X Limited. In short, always concern yourself to X Limited only. Don't start thinking about what will happen to Y. Let Y go to buy oil. Means let Y Limited go to hell. Because Y Limited is anyways a company in foreign country. They are selling goods in foreign country. They are paying tax in foreign country. So we are least interested. We are mainly interested in X Limited. How can X Limited hurt the sentiments of Indian government? So we have to control X Limited. Now see, after introduction we did 92A, 92B. Next section is what? 92C. And see, if I make the equation here also, which equation? See, AE plus IT is equal to ALP. Means what? If these two conditions are satisfied, we have to compute the arm's length price, because we cannot trust the price shown by the assessee. Now the theory of arm's length price is big. In this, you know what you have to study? Let me show you. Pay attention here. Just see what is going to come up now. This big is the theory of arm's length price. Means only when you study these many things, the theory of arm's length price will get over. In short, section 92C is very lengthy, because this is the main chapter of the topic. This is the main topic in this chapter, arm's length price. And you know why it is necessary for me to make a chart like this? Because you know, once the theory goes on and on, at one point you will feel lost. That's why, to keep yourself tied up so that you don't get lost, a chart is necessary. So whenever I proceed, I will keep reminding you that this is a chart through which we are proceeding, so that by the end this whole chart is fixed in your mind. So let's go as per the chart. In the chart, can you see A, B, C, D, E? Right now don't focus on all these things. See step by step. So can you tell me what is the first thing I have to teach? Meaning. First I will talk about the meaning of arm's length price, and then computation, and then average, and so on. So what is the first thing? Meaning. Now what is the meaning of arm's length price? So for meaning I will dedicate 3 sentences. Pay attention here. Firstly, it is a true, fair and the genuine price. Second, It is a price charged in uncontrolled transactions. Arm's length price is a price charged in uncontrolled transaction. Tell me, why did I say like this? It is a price charged in uncontrolled transaction. Uncontrolled transaction means a transaction where you have no control. For example, if you take the case of X and Y, since both are associated, so this transaction becomes a controlled transaction. Why it is controlled? Because when you can control Y limited, you can always control the transaction. And when you can control the transaction, you can manipulate the price. And manipulated price is not arm's length price. Arm's length price is a price in uncontrolled transaction. Means a transaction where you have no control. If you remember, I gave example of Prime Vision and JK Shah classes. So Prime Vision and JK Shah classes both are independent coaching class. So can I control JK Shah classes? No. Nor JK Shah classes can control Prime Vision classes. So since we cannot control each other, the transaction between us is not a controlled transaction. So it is a fair price. But if I take an example of Prime Vision CA section and Prime Vision college section, imagine two different companies. Prime Vision only, but Prime Vision CA section, Prime Vision college section. So both are associated. Now Prime Vision CA section and college section, if they enter into a transaction, it's a controlled transaction. Because I can control that other company Prime Vision college section because it is from my same family. So whenever the transactions are controlled, it is not arm's length price. So what is arm's length price? If the transaction is uncontrolled. So that's why we usually say arm's length price is a price charged in uncontrolled transaction. One more sentence. Arm's length price is a price charged to unrelated parties. Because see, if you charge something to the related party, that means you can manipulate. So when you cannot manipulate, when the other party is unrelated, I am just giving various versions of the definition of ALP. I gave you 3 versions. I repeat. First, arm's length price is a price charged in uncontrolled transaction. A transaction where you have got no control. Because if you don't have any control, you cannot manipulate. And if you cannot manipulate, it will be a genuine price. So it is a price charged in uncontrolled transaction. Second, it is a price charged to unrelated parties. Means the party with whom you are transacting is not related. Thirdly, it's a true, fair and the genuine price. This was what I had to say about the meaning. See, I say a lot, but don't lose the link. You won't lose the link if you keep yourself tied up in this chart. So what was the first thing I did? Meaning. And even in meaning, remember I said 3 sentences. Repeat those 3 sentences. Repeat. First sentence was what? It is a price charged in uncontrolled transaction. Then it is a price charged to unrelated parties. And it is a true, fair and genuine price. So these 3 points you have to remember in meaning. Anyways, meaning they will not ask in the exam. But you know, sometimes when you have to write the answers, you have to use such terms. Uncontrolled transactions, unrelated parties. These terms are used to address arm's length price. Okay, then look. In this summary, what is next? After meaning, what is next? Computation. Now see, in computation also, can you see I have written 5 things here? Read what I have written. Why to compute ALP? I will answer all this. But first let me show the questions. Repeat. Why to compute ALP? When to compute ALP? At what time to compute ALP? Who will compute ALP? And how to compute ALP? These are the things you have to study. So tell me one by one. See, I have written all this over here also. Look at this. First tell me one by one, why to compute ALP? You don't know why are we computing ALP? Because we don't trust. We don't trust this price. And if I don't trust this price, I need to know the genuine price. That's why to compute ALP. You ask, na? Why to compute ALP? The answer is because the law does not trust the price charged by assessee to its associated enterprise in an international transaction. And since we have a threat of base erosion, profit shifting, so that's why it is necessary to find out the true, fair and the genuine price. So in short, I answer to what? Why to compute ALP? Because we don't trust the price charged by assessee to its AE. AE means associated enterprise. Next question. When to compute ALP? When means under what circumstance arm's length price is computed. Means it is not that every assessee has to compute ALP. So when ALP has to be computed? Whenever these two conditions are satisfied. AE plus IT. Whenever these two conditions are satisfied, then we have to compute ALP. Whenever AE plus IT, this combination is there. So if someone asks you when to compute ALP, the answer is what? AE plus IT. Because see, if AE plus IT condition is not fulfilled, there is no need to compute ALP. See, when does law doubt your transaction? When does law doubt your transaction and feel the threat of BEPS? If your transaction with AE, so we feel, oh, you are transacting with AE. You are transacting with AE means it is your own company only. Something is fishy. And on the top of that, it is an international transaction. Profit is shifting to another country. We will compute ALP. So when means under what circumstance there is a need to compute ALP? The answer is whenever there is an association plus there is an international transaction, then to compute ALP. When? Then. Third point. Who will compute ALP? Who should compute ALP? Tell me. Who? You know usually what a student feels? The income tax department. Because they have the doubt. They doubt my price. Look at this. They doubt my price. So income tax department has the doubt. They will compute ALP. This is what the student thinks. But you know how it is? Department will not compute ALP. It is the assessee only who has to compute ALP. Means the law has put the burden on the assessee only. Means here who is the assessee in my example? X Limited. X Limited will have to compute ALP. Now you will wonder, it's so funny, why X Limited will? X has already sold the goods at $4,000. So what X will say? I feel $4,000 is a proper price. So when X Limited is asked to compute ALP, what would X Limited say? I said na, X Limited, assessee has to compute ALP. So what X Limited would say? Why? Because I feel 4,000 is proper. You have the doubt, you compute ALP. And assessee can say like this, na? But you know what law says? If you feel 4,000 is proper, okay, don't compute ALP. And if you don't compute ALP, if we have to compute ALP, then you are gone. There are consequences of that. What are the consequences? That will come at a later stage. Means basically law has threatened you. And the threat is what you know? You have to compute ALP. You have to compute. And a person who is argumentative, what he will say? Why? Because I feel this is already genuine. Okay, you feel it's genuine. Let it be like this. Because if we come on the ground, we come on the play field, and if we start computing the ALP, then you are gone. Then whatever difference is there, we are going to add to your income, plus there will be more consequences for that. Means law has threatened the assessee so much, that every person assessee is scared, and every assessee literally computes the ALP. Yes, only if the assessee is really genuine, only if the assessee is really genuine, he feels the price is absolutely perfect, he is not bothered. But little bit also, if there is a chance that assessee might have manipulated a price, no one takes the chance. No one takes the chance means no one takes the chance of not computing the ALP, because the law has made such a stringent and strict penalty provisions that in case you fail to compute ALP, the consequences are really bad. Looking at the consequence, no one takes the chance. Every assessee computes the ALP. And you know how it happens in real life? X Limited will transact at 4,000 during the year. But once the year is over, your year gets over on 31st of March. After the year is over, assessee is bothered in what, that what should be the true price of this transaction. And for that, he has to appoint a chartered accountant, because it is not a cup of tea for the assessee. Assessee won't be able to compute, because to compute ALP there are techniques and methods which is very technical, which an assessee won't be able to compute on his own. So that's why what assessee does, he will nicely transact with Y Limited at whatever price he thinks fit. But after the year is over, his chartered accountant will take the charge. What this CA will do? He will find out what should be the true price for this transaction of 4,000. And that ALP computation will be done by the assessee. See, although we say assessee, but usually chartered accountant will do. See, if you are still wondering why assessee should do, because see, this is the strategy of the law. Even in income tax, what law says, first you file the return. First you show whatever you want. Then we will take the charge. So that way you should get a doubt also, that law has asked us to file the return on our own. We will not file the return. Don't file. The consequences are very bad. So just the way for income also, law has said, you calculate the income, you pay the tax on your own, then we will take the charge. Same thing goes for ALP also, that you compute the ALP, you take the charge first. Then once you compute the ALP, then we will take the charge. In short, law has put the duty on the assessee only. In general also, income tax, we have to do first self-assessment. Remember self-assessment? In assessment procedure, there was a section 140A. How does section 140A expects anyone earning in anyone earning income in India, you should compute your income on your own. You should pay the tax on your own, and then we will take the charge. Similarly, for ALP also the same thing, that you have entered into a transaction with your AE, and it's an international transaction. You compute ALP. First you compute. Now whether he will compute or he won't, that's his lookout. But the law has put the duty on the assessee that you compute. And if you are not able to approach a chartered accountant, that law doesn't state, I am saying. So you compute the ALP if you are not able to approach a CA, but you compute, and then we will take the charge. Because see, if law would have said, you do whatever you want, we will see. And we will see, government cannot see everyone. There are so many people filing the return in India. Imagine the law would have been like this, you do whatever you want, we will see what to do. So we will see, government cannot check everyone. That's why, by putting the duty on the assessee only, what is the advantage? At least half of the assessee genuinely start showing the price. If everything is put on the assessee only, what? You compute ALP, you compute ALP, you compute ALP, half of the people in India, what they do, they will genuinely and honestly compute ALP, and whatever difference appears, that 2000, they will on their own add in their income. So half of the people are doing, so that is a good achievement for government. But yes, there are some crooked assessee, they are least bothered about what is ALP, we are not going to do anything. So for such people, government can handle them, because this way people will be less. So I am just telling you the idea of the government, that let's put it on the assessee only, so that at least some assessee who are scared and fearful, at least they will compute the ALP on their own. And the law has threatened also that in case you don't compute the ALP on your own, these are the punishments, blah blah blah. So by that threat, at least half of the assessee come online. In short, the point was, who has to compute ALP? It is the duty of the assessee only. In my example, X Limited will have to compute ALP, but usually X Limited would not know. So it will appoint a CA firm, especially big fours, Deloitte, KPMG, EY, PwC. They have to actually help X Limited in computing ALP, because computing ALP is a technical thing. Still, I haven't explained that how to compute ALP. But once you understand the technology, you will realize it's a technical thing which X Limited alone cannot do. It will have to take help of a chartered accountant. In short, see, I was here. Who should compute ALP? Answer this. It is the assessee who has to compute the ALP, and usually his chartered accountant. In exam, you can never write like this, CA will compute. See, this is what is the custom in real life. But law nowhere says go to CA. Why? If you can compute on your own, do it on your own. Just as for return filing, does law anywhere say that return should be filed by a chartered accountant only? If anyone can file the return on his own, you are most welcome. Do it on your own. But the practical thing is, people are not having that much knowledge, so they have to take help of CA. But the law does not say. Similarly for ALP also, the law does not say go to a chartered accountant. Law says you do it on your own. It is your business. X Limited, it is your business. You very well know what is the genuine price. You do it on your own. But practically, assessees are not able to do, and they don't have time for all this compliance things. So they have to take help of CA. So informally CA, but don't write in exam CA. That is why, all big fours, they have a separate department for transfer pricing assessees. You know what is a transfer pricing assessee? Someone had a doubt in me in some previous lecture. What is a transfer pricing assessee? In my example, X Limited is what? A transfer pricing assessee only. Anyone who satisfies this condition, AE plus IT, is called a transfer pricing assessee. Means to become a transfer pricing assessee, what is the condition? I should have some associated enterprise with whom I have sub-lug-cum-fo relation, and I have to enter into an international transaction. If this combination is satisfied, then the assessee is called a transfer pricing assessee. So in short, what I was saying, all the big fours have a separate department for handling transfer pricing assessee. So continue here. Who should compute ALP? Assessee. And then next point. At what time to compute ALP? What is the exact time when ALP is computed? At the time of filing the return. See here. Our previous year is 1st April to 31st March. So after 31st March, when the due date of filing return comes, look at the drawing. During this period, ALP computation is done. See, transaction might have taken place in April to March. But ALP computation happens in this period. That is why transfer pricing assess's due date is 30th November. Due date, do you remember? The due date for transfer pricing assesses 30th November. Now can you understand the reason why 30th November? Because for a transfer pricing assessee, see here, once the year ends on 31st March, after that, apart from doing the audit of books of accounts, they also have the headache of arm's length price. So that's why they are given a time of 30th November to file the return. See, a normal corporate is given a time of 31st October because they just have the headache of audit. But this transfer pricing assessees, apart from the headache of audit, they have got one more headache of computing ALP. That also takes time. That's why they are given time till 30th November to file the return. In short, I want you to visualize ALP computation is done during this period. Which period? After the 31st March till the due date. During this period, ALP computation is done. That's why if you see big fours, in this period, their transfer pricing department is very busy. Busy in what? Computing ALP for the clients. Obviously, ALP will be computed after the year is over. Because when the year is going on, the transactions are taking place. And you know, if there are 10 transactions, 10 ALPs. You didn't understand. See here. For example, X Limited has sold goods to Y Limited. This was a sale transaction. Then X Limited might have paid interest transaction to some another enterprise. So interest becomes a different transaction. Then X Limited might have purchased goods from some another associated enterprise. So that is a different transaction. So for each variety of transaction, ALP is computed. ALP is transaction specific. So imagine a big multinational companies might have entered into say 20-25 transactions. Sometimes even in sale, one sale is to Y Limited, one sale is to A Limited. Even for these two different types of sale, ALP may be computed, but usually for sale type of transaction, only one standard ALP will work. Whether you sell to this AE or that AE or some other AE. After all, for X Limited, a product will be same. And for a particular product, the price should be same. But still we can't say. Every transaction might have its unique feature. And what I am trying to say is ALP is transaction specific. So it may happen that during the year there are 100 variety of transactions. So there can be 100 types of ALP. That takes time. That's why transfer pricing assessee have to file the return when? Up to 30th of November. Not by 31st of October. Anyways, don't worry. I might have said casually that there can be 100 varieties of transaction. Usually in practical cases, you will find at the most 5 to 6 varieties. So for 5 to 6 variety of transaction, there can be 5 to 6 ALPs. In short, what I was explaining last, at what time to compute ALP? What time? What time? At the time of filing the return. So whenever the time for filing return comes, that is 30th of November of the assessment year, at that time ALP computation takes place. Precisely after 31st March of the year end up to the due date, during that period ALP computation is done. You know, this much in depth law has not explained. All this is my own explanation. You know, if you see the Bare Act, they have simply discussed how to compute ALP. That's it. But you know why I have to talk so much in detail? Because if I don't talk that much in detail, your concepts and fundas are not cleared. Imagine if I would not have said this thing, who has to compute ALP? You would always be under the impression that yes, ALP will be computed by the income tax department. No. So there are so small things, which law has not clearly stated. But I am giving you every small minute explanation so that there is no error or confusion in your mind. So tell me, till here repeat the points. Why to compute ALP? Because the government does not trust the price charged by me to my associated enterprise in an international transaction. Because the law does not trust that $4,000. Please buy that amount only. Because the law does not trust this $4,000, they want to know the genuine price. So that is why to compute ALP. Then when under what circumstance? When means under what circumstance? Whenever you are having an associated enterprise and with whom you have entered into an international transaction, then you have to compute ALP. That means if these conditions are not satisfied, there is no ALP headache. Next, who has to compute ALP? It is the duty of the assessee only. The assessee who has entered into an IT with AE. You understood short form? IT with AE means international transaction with associated enterprise. So the assessee who entered into an international transaction with associated enterprise, it is that assessee who has to compute. And if he doesn't know, he very well can approach the chartered accountant. So this was who will compute. Then at what time? So what time? After the year is over. See, during the year when you are actually selling the goods, you should be least worried. During the year when X is actually selling the goods, he should not be bothered about ALP and all that. That ALP headache should start after the year ends on 31st March till the due date of filing return. Basically, ALP is computed for what? For filing return only. Tell me, what is the purpose of computing 6,000? After this computing 6,000, we want to see the difference. And the difference of $2,000 in my example is to be added in the returns. So the whole purpose is for the purpose of preparing a return, you are computing ALP. So it is but obvious that ALP computation starts after the year is over up to the due date of filing return. So this was when. And the last point, how to compute ALP. So for this there are 5 methods. There are 5 methods of computing ALP. Now out of these 5 methods, you have to choose the one which is most appropriate. You know, the law is so confusing. They are not ready to say which method. What law is saying? We have created 5 methods. We have created 5 methods. Now if you ask us which method should be followed, you decide. It is your business, right? You are the assessee. You know your business very well. We are just IT department. We are lawmakers. How will we say which method is best? We have created 5 methods. Now you select the one which suits the best to your business, because you are the best person to judge your business. But you know, this thing which law has said, which thing that you have to select the best method, this has become a problem of dispute in real life. Why it has become a problem of dispute? Because law has nicely said you have to select the best method. But you know what happens in real life? The method which assessee selects, department does not accept. We don't feel this is proper method. Firstly, department has told assessee, you select what is best, you select what is best. But now in scrutiny what happens? In scrutiny what happens? The method which assessee, I said there are 5. One of the 5 has to be selected. The method which assessee has selected for computing ALP, the AO will disagree. Because AO will say, you selected this method. No, I feel this is not appropriate. The method should have been this. And from one method to another method, the ALP amount will change and your total income will change. And this always gives a rise to dispute. And what assessee would say in such case? When you don't feel this is not appropriate, you only tell us that what should be the method. But for that law says, why should we say? It is your business. You judge what is appropriate for you. But when assessee selects a method, then AO has an argument. Oh, I didn't like this method. I hope you understand what I am trying to say. This is a point of dispute for most of the transfer pricing assessees. What? That you select one method, but they don't like that method, and the dispute starts. And when dispute gets dragged, a transfer pricing officer is involved. Your scrutiny is done by AO. There is one more person called transfer pricing officer. He is an expert in ALP. So when the dispute starts between assessee and AO, a transfer pricing officer is involved. And if that dispute also aggravates, matter goes to DRP, dispute resolution panel. All this will come in later stage. Right now I am just trying to say transfer pricing is a matter of dispute in most of the scrutiny. And what is the point of dispute? That the method which you selected, the AO does not approve. And when it does not approve, when the dispute starts, first who is involved? Transfer pricing officer. And if he is also not able to resolve, the matter goes to dispute resolution panel. So these things are complicated in transfer pricing assessees. In short, right now, don't think about who is transfer pricing officer and who is dispute resolution panel. We'll study about that. Right now, I just wanted you to give the feeling that it is a matter of dispute in income tax scrutiny. And the root cause of dispute is law does not say which method. Law has told the assessee that you select the method. Being your business, you should be able to judge the best method. But that best method, department does not feel it is best. That's why the dispute. Anyways, we'll discuss about all these disputes, how it is settled at a later stage. Right now my question is what? How to compute ALP? The answer is out of the 5 methods, you have to select the most appropriate method. And who will select the most appropriate method? Assessee. And in case his method which he feels most appropriate, department does not feel appropriate, it will create a rise to dispute. That's what I was discussing right now. Now comes what are the 5 methods? Look at this. Look at this. First, did you read what I have written here? Most appropriate method should be selected out of these 5 methods. And what are the 5 methods? Look at this. Kapam, Rapam, Pasam, CPM, Tanam. These are the short forms. And these short forms are made by law only. See, many times I create my shortcuts and keywords. Sub, lag, gum, fo. But this is a keyword and short forms written in the law only. So in case you write this in exam, it's valid also. So let's see one by one. First method is called comparable uncontrolled price method. What is CUPM? Comparable uncontrolled price method. Then resale price method. What is RPM? Resale price method. Profit split method. Profit split method. Cost plus method. Cost plus method. Transactional net margin method. Transactional net margin method. And last, any other method as may be prescribed. What law feels? That someday we might feel these are not sufficient methods. There has to be some more method. So if some more method has to be announced, it will be announced in the budget. As of now, these are the 5 popular methods. And see, these 5 popular methods, law has done lot of R&D. And with lot of R&D, they have realized any type of business you do, some method or the other will fit from these 5 methods. See, firstly, do you agree? There can be lakhs of business. There are varieties of business. Some are into manufacturing, some are into service industry, some are selling goods, and some are in IT sector, some are selling telecommunication equipment, some are selling garments. There are so many types of business. But what law feels, these methods can cover any damn business. In that, the most popular method is this. Most of the business, this method will suit. Which one? Kapam. And the next popular is this. These methods are such that it can suit most of the types of the business. But yes, this RPM and PSM, after I explain you, you will realize, yes, these methods are applicable in typical scenario. Which one? Which one? RPM and PSM. RPM and PSM. But this Kapam, CPM, Tanam, if you realize, most of the companies can get fit into these methods. If you have done articleship in a transfer pricing department, you are very well aware of these 3 popular methods. Yes, these are methods applicable in specific scenario. Name the methods again. Kapam, Rapam, Pasam, CPM, Tanam. Full form? Comparable uncontrolled price method, resale price method, profit split method, cost plus method, transactional net margin method, and then last, any other method as may be prescribed. But as may be prescribed means that depends upon the budget. As of now, these methods are there. From each method, what is the common objective? To compute the arm's length price. And obviously from one method to another method, the ALP amount will be different. But then which method to choose? That who will decide? Assessee. And what law says? You have to select the most appropriate. Appropriate means the best method which suits your business. For example, I am into the business of developing software. So in developing software, which method suits the best? I have to take the call because it is my business. Who knows better than me? The industry of software. So I have to select. And if I fail to select the better method or the best method, it will give rise to disputes in the scrutiny. So till here we have done. Now actual discussion of the methods will not start today. Now can you guess what will be our next explanation? One by one I have to explain each method. And under each method there is a potential of creating a sum. Practical sums. Means this is not, you can say, a theory. Sum will come in exam. And out of 5 methods, they can create a question on any sum. They can create a sum on any method. But in real life, it's very difficult to select the method. But for a student, the sum is so straightforward that you can easily identify, oh, this sum is on this method. This sum is on that method. This is on this method. For you, identifying the method in the question will be not difficult. It will be simple. Because ICAI doesn't want you to get confused in the selection of the method. What they want, okay, let it be this method. How to compute as per this method? They are testing your computation technique. Whether you know the technique of computation or not, means they don't want to test on selection of method whether student is able to do or not. That is their rare objective. Their main objective is, let's assume this is the method. How will you compute? That computation technique they are testing. But in real life, this is a big challenge, that which method to select. Many times even chartered accountants have to do a brainstorming that whether to go for cost plus method or say comparable uncontrolled price method. So in real life it is a matter of brainstorming, but in exam don't worry, you will be very clear with the method to be used. But only thing challenging will be with that method how to compute the ALP. That calculation part will be challenging for you. Anyways, that will be done later. Right now, let us take it from the top. In this chapter, how much we have done, look at this, see what I am highlighting. We have done till here. The portion which I have marked has been done by me. So explain one by one. In introduction, what did I explain? The cheatings which multinational company do, which amounts to base erosion, profit shifting, and for that the law is very strict. They've introduced a transfer pricing law that says that whenever AE plus IT, your price will not be trusted. So that introduction. Then second part was 92A. It says that whenever there is sub-lug-gum-4 type relation between two enterprise at any time during the year, then it is called associated enterprise. Then 92B I did, which says international transaction is a transaction of sale, purchase, lending, borrowing, blah blah blah, in which at least one party should be non-resident. Either one is NR or both are NR. But when I say both are NR, means one of that NR should be having a place of business in India, liable to pay tax in India, and who will try to shift the profit of India. So in case of both NRs, one should be having place of business in India. Then I did, after 92A, 92B, next was 92C. And the theory of arm's length price, broadly it is in 1, 2, 3, 4, 5 parts. In that we have finished part 1. What is that meaning? And for meaning I said 3 sentences. It is a price charge in uncontrolled transaction. It is a price charge to unrelated parties. It is a true, fair and genuine price. By heart all this. Then I started with computation. In computation I said 5 things. Why to compute, when to compute, what time, who will compute, how to compute. So why? Because government does not trust the price charge by you. Whenever there is AE plus IT, then whenever there is AE plus IT, then what time ALP is computed. Sorry, first was who will compute ALP. Who will compute ALP? Assessee. And if he is not able to, he can approach a chartered accountant. And ALP is computed at what time? Precisely what time? After the year is over. After 31st March up till the due date of filing return. At that time ALP is computed. And lastly, how ALP is computed? For that there are 5 methods. And out of the 5 methods, you have to select the most appropriate method. And what is most appropriate? That is a call of the assessee. And in case his most appropriate law doesn't approve, then there is a dispute. Tell me where the dispute goes. When some dispute arises on account of ALP, a transfer pricing officer is involved, and if he is not able to resolve it, then dispute resolution panel is involved. So these things will come in future sections. Anyways, till now we have done till here. Next is these methods will complete. Revise and come. Please revise and come. Wait, some homework is pending. In advanced ruling, whatever questions are there in our book, I think there is 1 or 2 questions. Solve both. That is your homework. Advanced ruling, 2 sums. I guess there are 2 sums only. Both are for homework.